Hi, everyone, and welcome to the TimingResearch.com Crowd Forecast News, episode number 313 for September 27th, 2021. The option professor is going to do his solo episode for the month this time, and he's actually traveling today, so we recorded this a few days ahead of time. And also, if you missed it last week, we recorded a great set of presentations on VIX and news trading. So Option Professor was one of the presenters that we had on board for that. And we also did 15 other presentations. So you can find those at TimingResearch.com. And so I'm going to go ahead and turn it over to the Option Professor for his presentation today.
Okay, thank you very much, David, and welcome to everybody who's here with us. There's a lot to talk about. I'm going to be talking a little bit more about the longer term trends because a lot of the shorter term trends have been violated. Moving averages have been broken. RSIs have gotten underneath 50. So I'm going to go into the market on a little longer term vantage point, which some people might want to know, where is the support underneath, that type of thing. Before we get started, Option Professor, we have been around for quite a number of years. We've done many seminars for thousands and thousands of investors to educate them on the uses and risks of options. And we also have experience for decades in not only the education part, but actually in the trading area as well. So what we are going to do here today is share our knowledge and our expertise. We do want to remember to remind everybody that all investing involves risk, and it's not right for everybody. We are going to be sharing opinions and observations, and obviously they're our own. And so this is for informational purposes only. It's not advice or anything like that. Okay, so again, we always say consult your brokerage firm, consult your broker, your advisor, determine your own suitability on what your risk tolerances are, and then take it from there. All right, now let's get right into this stuff because on the screen here, I've got the S&P 500, which I'm hoping everybody can see very well. And I am going to add one thing to the relative strength index. So give me a moment while we do that. And that will be helpful for people to understand what the relative strength is doing. We'll just update the chart and we'll be all set. Okay, so there you go. This is a 20-year graph going back all the way till 2002. Okay, and you can see that the markets, were trending up between 2003 and about 2008. Then, of course, we had the big crash. Then after the crash, we went back up. But if you notice from the top of 2007, it took all the way over to almost 2011, actually almost 2013 to recover to the actual high, right? And this time where we had the big drop, not only did we go back to the high within months, it's gone nuts on the upside here. So again, the quantitative easing started here, and that might explain why the charts have been going nuts on the upside ever since, because zero interest rates and printing unlimited amounts of money, that's what it does to asset prices. So when people say there's asset inflation, there's the chart that shows you exactly what they're talking about. Okay, we're at the moon up here as far as the charts are concerned, though. 4,600 area where we hit, obviously it's very extended, as I've been saying to people. If it goes to 5,000, it's not going to get less overbought, right? And again, you notice the RSI peaked here and it was there. Then it didn't, it was even under here and it was there. And now we're way up here and the RSI is there. So again, looking at the 20-year graph, you'd have to say what? We're obviously in an uptrend, but a very strong move to the downside could happen at any point if the news were to change, because again, this far away from the moving averages and the concept of reversion to the mean is going to be becoming more and more and more weighty to the market, in our opinion and in our view, looking forward. And that's why the returns people are talking about for 2022, 2023 may be much more muted than we've seen, because this kind of stuff, it's hard to sustain, right? And of course, the news is turning a little bit as far as what the accommodative central banks, European Central Bank, ECB, and the Fed, they are starting to talk a little bit more about bringing that accommodative printing back in. And so, again, if yields are to rise at all, then of course that could also compress the valuations. Valuations are how much they'll pay for $1 of earnings. This year, according to JP Morgan's estimates, they think the earnings are going to be at 210 for the S&P. If you are at 23-to-1 PE ratio, then you're at 4,800 and change. Where we are now, or where we hit, was more towards the 22-to-1 PE ratio, which is around the 4,600 neighborhood. So you can see that's around 22 PE. Now, there's some people that I've heard, including analysts from Citigroup and others, who believe with the inflation rates where they are now, the more normalized PE ratio for this type of environment would be 18. So 210 times 18 would make it 3,800 ballpark figure. And next year they're looking for 240. And if that was at 18, you'd be at about 4,320. So that's why some people are thinking the 4,600 neighborhood we hit, could be an area that could provide a little resistance. Although a lot of analysts at JP Morgan, quantitative analysts, and other ones that are on CNBC have been preaching, and then Wells Fargo just raised their estimate to 4,800, and everyone's talking 4,700. So again, there's still a lot of bullishness out there, and it could still go. But again, some of the technicals to me, us being this high away from the averages is concerning. Looking at it, a 5-year graph, we did break the first 12 SMA, which comes in at 44.28. So again, closing back above 44.28 would be very constructive. Okay. It held a little bit here in the 43.22. So closes underneath 43.22 would not be the greatest. And of course, this is a line that's been ascending ever since we went down through the crash. And then once we got above it here, it's been clear sailing all the way up. So the blue line, the 36 SMA, that comes in just a shade under 4,200 at 41.84. And again, as long as that can hold, then it's still a constructive market. And this drop that we've seen somewhat recently may just be that, a correction in a continuing bull market. Looking at the 1-year graph, this one really does have rolled over, and they're all converging at the same price, which is around 44.70 ballpark figure. So closes above 44.70. Our resistance levels are 44.60, 44.80, and 44.10. So those are the 3 levels. Can you see it's had a hard time getting above 4,500? So if we're going to 4,600 or 4,700 or all these lovely places that people say we're going to, you got to get above these moving averages. And if you do, then I think being more constructive makes a lot of sense. So again, the 3 that we, in our opinion, think are important are 44.60, 44.80, and 45.10. We went up towards 44.80 right before it tanked. So again, now where's your RSI on the, you're underneath 50. So again, getting the RSI back above 50 would also be very constructive, because you can see when we're in an uptrend, it generally stays above 50 the whole time. Every once in a while, it'll peak underneath, but not for long. Again, if you notice the drops here, 1, 2 bars and back, tiny bar back, 1, 2 bars, 1 bar back, 1 bar back, 1 bar back. So, you're getting a little further underneath it here. And so again, that's where some of the problems lie. But again, on a longer term basis, if you wanted to know where the net might be on any kind of pullbacks here, we did hit one earlier at around 43.22. It stays above there. And then of course, down here again, the blue line comes in at 41.84. Okay. I think the 50-day, the 200-day moving average is in the low 4100s as well. So you certainly wanted to try to stay above 4100 if you can at all times to stay in the nice mode. On the long-term graph, the 20-year, the 12 SMA, which would be a 10% drop, bring you a little over 10% drop, brings you around 4,000. So there's a line right there to hold on to as well. And that still has an RSI above 50. In fact, the RSI here is at 71. So it's still pretty rich as far as the RSI is concerned. So again, those are some of the areas that you might want. Now, if we're going to have a big correction, there's these numbers down here, and that is going to be 3,300 and 3,550. Big correction on this one again stops around 4,100 area. So there you go. Those are your numbers to work with as far as that's concerned. If we were going to look at the QQQs, you are looking at again on the daily graph. They have let's just check out the daily here. That's broken. But again, you notice all three averages have not crossed over yet. Again, so getting right back above 372.50 and 376 would be very constructive for the QQQs. So those are numbers that I'd be looking at if I wanted to get constructive. The RSI again has broken under 50. So again, that's what that looks like on a shorter term basis. Not that short, on a 1-year chart. Let's take a look at the 5-year. Again, as long as that blue line remains intact, which comes in around 340, what does it come in at? 343 ballpark. Next one up on the green, 354, and then it already broke that one. So getting back above 370 would be nice. A lot of gap there too. RSI here again is still above 50. So again, there's a reason why people think that the fourth quarter is going to be positive, because the earnings are going to come out and bail everybody out. And some of these problems could get resolved. I mean, we've got a debt ceiling situation that's got to get resolved. The Fed, again, how much tapering and when and all that stuff, still a little bit up in the air. And then, of course, the China situation needs to get resolved a bit. And there are some talk over there that they could be going into recession. Only time will tell. But that's some of the stuff going on with the NASDAQ stocks as well as the S&P. Let's turn over to the semiconductors. A lot of people love these memory chips that they think are going to be the big thing and continue to be the big thing. So as long as this baby can stay above the 250 mark, that's been a nice trend all the way up. RSI, though, has not really been confirming all this high mark. Sometimes when the RSI, the market's making highs up here and the RSI is not, that's called a divergence. And that means volume might be drying up and it could be a time for a turn. So keep an eye on those numbers as well. So longer term, again, those are some of the numbers to keep an eye on. On the really longer term, obviously, if this thing has a full-on correction, it would have to go down 100 points to hit the 20-year 36 SMA. A more moderate drop would be hitting the red line, which certainly has not been violated since 120. So that's a pretty important number. And that comes in around 238 through 239, 240. Very similar to one of the other numbers I mentioned. So there you go on the semis if you're bullish on the semis. A lot of people like different pharmaceuticals because they pay pretty good dividends. I'll give you a couple here. Pfizer. And Pfizer on a 20-year graph obviously is got ahead of itself, and that's why it pulled back. But it's still above all its moving averages, which all come in right around 38. Let's call it 38, 39. So as long as we stay above that number, that looks pretty good, and it pays a pretty solid dividend. And the RSI on it is above 50. Looking at a 5-year graph on it, it broke the red line here, but it should have some support a little under 42 and then a little bit under 40. Again, this is an area where people think there's some value. So if it does drop down, it's certainly discounted off its high price. And that is not a bad thing. So that would be one in that area that we would talk about. Turning towards energy. Some people have still been predicting we're going to go up towards 80 in Q4 on the energy prices. Only time will tell. But keeping an eye on this, you certainly wouldn't want it underneath 45 there. And certainly if it can get above 55, you'd be able to open the door for much higher levels. The RSI is hanging right around the 50 number here. So really it's in a range, 45 and 50. Starts breaking way above 50. get above that number there, which is 51. That would be very constructive. And then, of course, breaking under 45, as I said, would be kind of negative. And that would take that RSI into negative territory as well. And it might be coincidental to a price of the crude dropping as well. So keep an eye on that. Let the prices lead the way. Some of the ones that people like in this sector also are the exploration and production. So OIH. And OIH, again, is got to get it above 200. If you can get it above 200, that'd be very constructive. And look all those numbers above it if it really got cooking, especially if it took out 250. So there could be big potential here, but you got to get some upside breakout. You got to get some movement on the upside. Another one is XOP. And XOP, again, looks a little bit better. Again, you don't want it under 70, but you certainly, it's at a big apex right here. And all the numbers are coming in right around 83 to 86. And so if we can break above 90, this thing could very much get its legs because the blue line is already rising. That's very positive. So keep an eye on this one. Your RSI is right on the ledge, coming in at 51. So this thing starts taking out 90. I think you'd be onto something here. Keep an eye on it. And again, if it takes out 90, then takes out 100, there's a lot of numbers up here, a lot of white area. And that blue line, that doesn't turn up and down every day. So it was violated here. That's not good. But look how quick it got above it. That's a good thing. Now, if you can get above 90 and 100, then you got something cooking. So keep an eye on this one. Okay. And then some of the individual ones that we've been watching in the energy sector, Halliburton. And this is another one where we need to get a little more strength. Get it above 21 bucks would be very nice, right? Above 21, 22. And if you look at it on a, look, this is on a 5-year basis. There's a lot of real estate up here to be filled in if it gets going. So above 22, above 25 with the RSI right here on the ledge, worth a look. Again, you start taking out this low of 18 or whatever it was. What's the low? About 18, 1782. You start taking that out, then obviously this all turns down and that's no good. And another one they like is Schlumberger. And Schlumberger is the same story. And, you know, again, getting above 30 would be nice. And get above 35 would be better. RSI is right on the ledge. It looks like it's trying to tilt down. So this thing starts taking out 25. That's definitely going to be a rollover a bit. So keep an eye on that. With regards to the value trade, okay, that was a big one that everyone was talking about. Let's take a look at the value stocks. First of all, we're going to look at some dividend payers. And there's 3 of them that I kind of look at here. So let's take a look at all 3. This is the high dividend yield from Vanguard. And again, it was looking good, but now it had given it up. So again, it really has to get above these lines here to look any good. The RSI is giving it up a bit too. So the value trade has been under pressure, no doubt about it. One of the reasons is obviously if we're going to have slower growth. I mean, if China starts slowing down, it probably has an effect on everybody. They're the second largest economy at about what, 14, 15 trillion now to our 22 trillion. So, you know, they have a house they're trying to get in order, and that may involve a slowdown. Here on high dividend, though, that's the kind of hit it's been taking. Now let's look at it on a longer term basis. It did break the blue line. That's not a good sign. So let's get it back above 103. That's the first thing, and then back above 105. Okay, and on a long-term graph. Long-term graph, if we're going to have a severe drop, again, coming down towards 90, which would be a 10% drop from here, that would be where the longer term support is. If it's going to hold 95, which are these former highs, or maybe even the red line there, which is 98, that would be a zone as well where it might hold 95 because this is a former high, and 98 because that's the 12 SMA on the longer term graph. Okay, so there's one. Now let's look at an international high income. This is a VYMI, International High Dividend. Okay, and this doesn't go back as far, so I'm going to go to the 1-year graph. This thing's giving it up. And one of the reasons it's giving up is it's international. And when China starts looking dodgy, it makes the entire emerging market look dodgy. And it makes the international markets like Europe, who have liabilities or whatever in China, look dodgy. And that's why I think they've been dumping this. With regards to, because again, the word default is about as dirty a word as you can use in credit, right? So again, some of these companies that are paying higher dividends may be in trouble because of some of the concerns in China. Anyway, that doesn't look very good. And then on the 5-year, again, you got to get it back above what? Right there, $67. So if you get it above 67 and 68 again, this will be back on the bicycle. RSI is right under 50 by a little bit, or right at 50 almost. Yeah, a little bit under, maybe just a shade. Yeah, a little bit under. So again, this is one where, in our view, you want strength and then you join the party. You don't want to catch falling knives. That's a falling knife. Schwab has one that's interesting too, SCHD. And on the Schwab, again, that came down and is testing right here. So you'd want it to stay above 73 if you can do that, 73, 74. On a 1-year graph, I'm sure it broke. Yep, it broke. So you need to get it back above 77 here to get back on the bicycle here. And on a 20-year basis, this has been a very good thing. It didn't go back 20 years. Okay, so even on a 5-year, look at it. Ever since we had the crash, ever since $52, this thing pays a very good distribution and your principal has been rising all the way. Again, you got a double top and you got a point here. So if we start taking out 73, and this RSI takes out 50, it would open the door for a more significant drop. So there's your numbers on that. All right. Other stuff on the value trade is the banks. Let's go over to the spiders. And XLF, as you can see on a 1-year graph, has definitely broken the fever. Getting back above 38 is important. And then basically on the 5-year, you want it to stay above 35 and a half, 35 right there. And on a 20-year, you want it to stay above on the short-term basis here, are the 12 SMA, 33 and change, long-term 28 and change. Again, the banks have been doing great, but it is a situation where some people are concerned that if rates don't rise, their margins won't come back. And the word, credit problem is not been on the charts for a long time. So will there be some credit crises coming up? Well, there's a lot of assets for people to borrow against, so we'll have to see how that goes. But right now, that's basically what the financials look like. Which, again, the reason I'm showing longer term graphs is on a long-term basis, they're hanging in there. But as I said on the S&P, these things are far away from their long-term averages, and sometimes they come back, and sometimes they go through. But a lot of times they at least come back towards the averages. This action here is inordinate. Only during the crashes do you get this far away from the averages. And then ultimately they go back toward them. Industrials. Okay, still positive on a long-term situation, but pulling back. So again, in the 4th quarter, a lot of people are thinking that the value trade will come back, which is your banks, materials, industrials, maybe energy, and things along those lines. Okay. And there you go. So yeah, long-term graph, you want it to hold 95, and there's the other numbers there. On a 5-year, broke, get back above 100, you'll be all right. 1 year, would like it above 104. That's the industrials. Okay. So we've gone over some tech and we have gone over some industrials and we've gone over some of the banks and the S&P and the QQQ. What I'd like to take a look at here is the crypto. Let's take a look at GBTC. Now, again, a lot of people are looking for this stuff to blow out the highs and take off by the end of the year. The end of the year is not that far off. So this thing is broken down. You need it to get back above 38 on a 5-year. You'd like it to get above 35 and 40. Now, this could be a Fibonacci pullback. Let's check it out. You bottomed out here at what price? 24 bucks. You peaked here at 41.77. Differential 17.77. Take 61.8%. You're at about 11 bucks. If I take 24 and I add 11 bucks, it gives me 35. Well, it's trading 33. So it's actually come back a little further than you'd want. And it might be trying to go into this gap. Again, if this thing is going to where these numbers are supposed to be, maybe it's wise to see if it can take out 42. Because if it can't take out 42, it can't go to 45, 50, and 55. We were saying when the S&P was under 4,500, that it needed to get above 4510 in order to get to 46 or 4,700. So in this particular case, we never saw it get above there. And then we had that big drop down, that was very big drop. So sometimes waiting for strength and then joining a conga line that's in progress is better than either holding a conga line that's not moving or getting into a conga line that is not even formed and you're hoping to form one. Okay. So this is a classic case of maybe it'll hold this gap down here and maybe it's a bargain right around here. But certainly getting back above 38 would be a first sign of it's turning, and above 42 would be another sign. And you might want to wait for those signs before you get too excited about it. Let's take a look at Aetherium. Okay, there's the chart on Aetherium. If you look at the 1-year graph, it has broken now down, but it's still, all these lines haven't crossed yet. When it turns into a more significant drop, these lines all cross and they're not even crossing. So if this thing starts popping back above 33, well, actually 30, 31, and then 33, then I think you're back on the bicycle. So again, keep an eye on it and see if it can get back going because this blue line is rising, which is a good thing. Same thing here, Again, we thought this was the bottom. We told people we thought this was the bottom. So far, that's been accurate. But if this thing comes down and takes those out, well, forget about that being the low, right? But again, that's where I would be defending if I was bullish because that's the low. This stuff here is a buying opportunity as long as that low is going to remain and we are going to take out these points before the end of the year or anytime, really. Okay, so there you go on Aetherium. Both of them still look like they're okay. They're just being shaken up right now. Again, if deflation comes into the picture, what that means is that people will be in need of cash. And when they're in need of cash, they sell things. They sell things like gold and silver. They sell commodities. They sell tangible assets or digital, anything that you can sell to raise capital. So, and sometimes they raise it to pay off losers. So if they have gains, they try to do it that way too. Swap, especially going into the end of the year, they may take money off the table in a good investment simply to pay off or take a gain because they have losses elsewhere. So that's something to consider as we go into the end of the year as well. So there you go on that. Let's look at, this is a commodity mutual fund by Fidelity. And a lot of people, would like to get some exposure to the commodity sector, but they don't want to trade commodities on their own. So this is a vehicle that, and again, with all these ETFs and everything else, I'm not recommending them, but if you were interested in them, you go to the companies that issue them and you get their prospectuses and you get their disclosure documents or whatever, and you find out all about them. Then you go ask your brokerage firm and your broker if it's appropriate, right? Anyway, this has been a pretty good deal here in the last couple of years. It came out. When did it come out? It came out not that long ago. Let's see what we can find out here. Okay, this thing goes back to 18, 19, right? Okay. Then it comes out and it goes down. I think it came out about 25 bucks. Comes out, goes down to 2019. And then in March of that year, remember that number. That is the low of the cycle in commodities, according to many people. So that is an extremely important number if you're bullish on commodities, because you don't want that getting taken out. So basically, this thing has been on the bicycle since that cyclical low in March. And you'll notice many commodities bottomed at the same time, be it oil, be it coffee, sugar, soybean, metals, whatever. They all seem to have been rising since then. And then look at this thing. Been rising very nicely ever since. Okay. Now, if you go to a 5-year graph, you'll see that it got violated here when it violated the number here, and that was at around 33. And then it held the green, right? That's the 24 SMA, and it's back on the bicycle. But that does look like a little bit of a peak. So have the commodities peaked? Well, right now, that's the peak so far. Trend still looks like it's up, but again, whenever it hits a high point, you got to be concerned that it could be the peak. But as long as the trends remained up on the moving averages, again, the demand for commodities is tremendous. Supply bottlenecks are a problem. And so again, the supply and demand dynamic could be problematic. So this is a vehicle for people who would like to get exposure for a risk investment into the commodity sector. And again, past performance, not indicative of future results, but it has had a pretty good run. If the commodities keep running, I would imagine it has a good future. If the commodities have peaked because of a slowdown in China, because of demand or whatever, then again, this will have a difficult time. Let's look at a couple of other things that people are kind of looking at sometimes, is the Russell, small caps. Now, 217 was out when I did this. Looking at a 1 year, it broke, but the averages have not all crossed. So if we can get back above 222, that would be very positive. Back above 225, 230 would be great. RSI is just a little bit under 50. So there's your number. There's your number. Get it above these numbers, you'd be back at least above the averages, right? And your RSI might be above 50 at that point. Maybe. Above 225 and 230, it would be. Here you go on the 5-year. Again, it looks like they all are meeting here. This is the dangerous thing, because you've got a conversion of everybody here at about 222 to 223 ballpark. As you can see, it tried to get above it and it failed. So if it can get it back above it, you're in good shape. This baby starts taking out 210 and they're going to be yelling out timber. And that would probably mean that something negative has gone on, because if you take out 210, your RSI is going to break under 50 and accelerate maybe. So keep an eye on the IWM, which is your Russell, and make sure it doesn't get under 210 and get it above that 222 to 225 number, and then you might be onto something. But I don't, when you get all of them converging, it tends to make some kind of a big move. Maybe it's temporary. Here they all converged. You had a nice big up move and then a tank. So maybe you'll get a down move and then up. I don't know. But the bottom line is something of size should be happening, because that's what they call a traffic jam. And a lot of people are very bullish on the Russell. They think it's going 230, 240, 250 because they think people are going to come into these small caps again. this thing has gone sideways here for a long time. So if you measure the width of this, if it broke out above 230, you'd have a heck of a move. If it breaks under 210, conversely, you could have also a pretty heck of a move. Let's look at the 20-year. Yeah, see, the 20-year is way down here. So if this thing busts under 210, you don't know where it'll stop because there's an air pocket here, possibly. So according to how bad the news is that it's selling on. If it's a radical bad thing, then, don't forget, everybody who got in here to here has made a lot of money. If they all want to get out at the same time, it gets very sloppy. The other one is the transports. Now, transports have told me that don't trust the stock market. Why have they told me that? Because they made a high point, you'll see in a moment, in May. And they haven't made a new high since May. See that? That's the high. And you see that date right there? What does it say? May 7th, May 10th. Okay. You haven't seen that you've been anywhere near that thing since. Okay. Now, today we were up a little bit of a turn, which is not a bad thing, but it's definitely still underwater. Now, if you can get back above 250 and 255, then it's back above the averages and you'll start maybe seeing some improvement. Let's look at the 5-year graph. That's why it's important to look at different time zones. If you just look at the 1-minute graph your whole life, it's hard to really figure out what the big picture looks like. Okay, so there you go. It broke here on the 5-year. They're converging right here, right? Another traffic jam at what price? 253, 252. So you start getting above 252, 254, that would be very positive. And your RSI is just hanging under 50. So if you start getting above 252, 254, and then back above 260, this thing may go after the high in the 4th quarter. If things get rosy, like people are talking. If not, and it blows out 240, a lot of real estate under here, all the way down to where these highs are, 200. And on the 20-year, again, this is the problem with the markets. You're up here at 280 and the moving averages are at 200. You know how much on a percentage basis that is? 80 divided into 200. It's 40%. Name another time in the last 20 years you were 40% above the 200, the 36 SMA on the monthly. Here you were very extended, but let's see what you were. You were at the high of 209 ballpark, and the SMA was 165. So you were 21%. So these numbers here are like 21% above. Here you're at 40% above. And now you understand why valuations are very important, because if they compress your valuations like they did in China, because they see things slowing down, our GDP numbers at 6 and 8 and 10 or whatever these crazy numbers are coming out of the crash of last year, obviously they're not going to be sustainable, more than likely, right? So they're going to compress. If they compress enough where people think that the valuations are too rich, which is what they did over in China, they compress the valuations. Companies over there are still making money, but they're not paying the same amount for each dollar of earning, right? This could be what's happening here a bit. These companies are probably still going to be very profitable, but they're not willing to pay the same amount on a ratio basis. And that's what makes a correction possible. So again, it's holding up here, which is nice. So look at this as a good number for support. That's at 241. And then on the 5-year, any numbers like that? Not really. Getting back above what you have to do there. Okay, but the recent lows, there's a reason why the recent lows here on this chart at this time was around 245, because that again, the low here was 241. So again, we just showed you 241 was the low that day. And on the 20-year graph, the moving average is at 241, not coincidental. So 241 is a very important level for this. If it breaks, it could be problematic. And that's your transports, your FedEx, which has been under trouble, your railroads and your UPSs and all those kind of guys. Let's take a look at the reopening trades. When the reopening trades seem to be the hotels Marriott, we'll take a look. Okay, Marriott is still looking pretty good on the 20-year basis, but let's look at the 1 year. Okay, so like I say, if we can stay above the number of 136, then that's not that shabby. And the RSI is at 58. So, keep an eye on Marriott. That's for the hotels, right? Let's take a look at Expedia. Because if people are going to go anywhere, they're going to go to Expedia and get those cheap hotels and get those cheap rent-a-cars and everything else. So here you go on Expedia. And Expedia is looking pretty good as long as it stays above 146. And that's on a 1 year graph. Let's see on a 5 year graph. Okay, you need to get back above 160. And look, you got a traffic jam up here too. So if it gets above 160, that'd be very good. And then on a 20-year graph, it is got back above. Okay, went underneath the 12 SMA, but it's above the 148 now. So that's good. Keep an eye on 148, 140 and see if that holds. Got a little bit of a traffic jam down here at 120. That only happens if the news turns sour. But right now, that low looks like it's worth defending because it's right against those highs, right? And now you're back above the 148 area. So that's a good place to keep above. So keep an eye on Expedia. The rent-a-car companies, they were, charging all kinds of money for a while. They kind of come back down to earth. And this one here is Budget and Avis. I think that is Budget and Avis. So keep an eye on the rent-a-car here. No, this is not cars.com. Hold on a second here. Wrong chart. I was looking at Avis Budget, CAR. That's what I put up there, CAR. Okay, let's get the right chart up there so we actually can give you accurate information. Okay, so Avis Budget is, but again, they were overdoing it a bit. Now they're coming back down. But as you can see, as long as it stays above 90, that's not a bad thing. And then turning towards the 5 year. Again, it came back down here and tested the blue and then it came back up. So right here, you got a traffic jam around 85. You don't want it breaking underneath 85. So there you got two good supports, 90 and 85, if you want to stay constructive on the reopening and rent-a-cars. Let's take a look at some of the airlines. If you want to take a one-stop shop, you take Jets. Let's see what Jets look like. Okay, on a 1 year basis, the Jets are going traffic jam again right there at $22. So, as long as it can stay above 22, that would be good. RSI is right on the level. So really, if you want to see momentum, let's see it take out 23.5. If you can take out 23.5, then at least you've got momentum. Plus you got the averages underneath you and the RSI would be more convincingly through 50. Turning towards this one again. Yeah, getting above 25 here would be very nice. And on the 20 year. Yeah, again, you'd like, well, this is not a good one because this is a company that, the companies themselves been around a long time, but the ETF has not been. So a little less data. If we're talking airlines, let's talk about airlines, American Airlines. Individual one, it's $19. There you go. Blue line's rising and everything's converging. So this baby starts trading 21, 22, you might be off to something. So 21, 22, and then 25. Where's your RSI? RSI is at 47. So this is one I'd keep an eye on like a hawk because, like I say, a lot of real estate up here, a lot of real estate. And again, getting above 22 and then 25 would give you good momentum. So keep an eye on American. How about JetBlue? All right, JetBlue. Let's go back here. Again, get this thing going a little bit above 16, and that would be very nice. Keeping it above 15 would be very nice. So those are two numbers to work with, 16 and 15. If you're looking at a 5-year deal, yeah, it's a little sloppy here. First sign of a turn would be closing above 17. Well, first sign would be closing above 15 and change. No, let's call it 16. So if you get above 16, then you get above 1750, this thing might be off again. So keep an eye on this because, again, a lot of real estate on some of this. And a lot of people like Delta. Delta Air. A little more business traveler here, a little bit more international. So again, this thing is in trouble for that. But, you know, it's also down in price. And if you go for the 1-year graph, let's see what it looks like. Yeah, you know, this thing might be ready because, again, if I think they're opening up the back and forth to Europe, that's got to be helpful to the Delta. And, you know, you hold the 40, which would be nice. Get above 42 would be even nicer. Then your RSI would start popping because it's right around 50 now, which is not bad. So these airlines might be worth a close look because, you know, them and the oil stocks might be very interesting to keep an eye on in this Q4. Then you've got, what do you call it? This one, you'd like it to get back above 44 and change, 44 to get going. And then on a 20-year basis, it's probably holding the red line. Yeah, get above the red line here and get it going. That's about 45. So, you know, excuse me, not 45, it's above 42. So keep an eye on these airlines. It looks like there could be something cooking there. The other ones that seem to be a little bit dodgy that we're doing okay are the casinos because a lot of their exposure is over in Macau. And when Macau starts talking about taking government officials to help you supervise your business, that doesn't sound good for gaming. Because Lord knows who their clienteles are. So bottom line is these next two have had a very difficult time. Now, if the news changes out of Beijing and sounds a little bit more, you know, shall we say, less capricious and a little bit more normalized, you know, these things could turn around. The whole thing could turn around because people are definitely hedging against the bad news there. Anyway, as you can see on a 1-year basis, this thing went sour. This is LV Sands. I think they sold a lot of their properties in Vegas. Well, it went sour up at 62. So you're a little late to the party to get negative here, but it definitely doesn't look very good down here. Let's see if the RSI, yeah, the RSI here bottomed at 26 and the RSI today is at 30. So if this thing were to start going back above 38 and then 40, then you might have something there. Back above 46, I think you might be able to make an argument that these are a double bottom down here. Not exact, but, you know, that could be something to defend if you can take out 46 or even get back above where the traffic jam is, which is at 42 ballpark. Okay, and then the other one is Win. And some of these short sellers are on the TV talking about all kinds of low prices here on some of these things. But there's an argument. Some analysts, Wyndham. Well, Wyndham Worldwide, you can take a look at it. Oh, never mind. WYNN. Wynn Resorts. Okay. What happened to my... Okay, here we go. Just going to get this corrected real quick for you. Again, Wynn Resorts have been rolling over as well. Some people are talking about it's got a lot further to go, though. But you can make your own decision there. This is a 1-year graph. Where'd the sell signal came in? It came in at 125. So again, where you been? If you want to be negative on it, you should have been negative a long time ago. But sometimes it's, you know, accelerates a lot at the end. So here you go down here. And on the 20-year graph, again, you know, if Wynn could ever get back above 108, 109, it might be getting back on the bicycle. So again, some people think it might go into the 40s here and test this low. We'll have to see how the news comes out of China because that's going to be a big factor. So there's some of their reopenings and a couple more reopenings. How's those cruise lines looking? Carnival. These guys, they look like they were left for dead, and then they went from, this tank job down here, where it was almost bankrupt. All of a sudden, they could raise money all over town. They're back up to 30. The problem with raising money all around town to pay off the high debt that they had to take in is that they at some point have to make some money, and you can't make money if nobody's traveling on your boats. So again, right now, you'd like this thing. Let's go back to the 1 year, see what it looks like. Yeah, like again, the reopening trades, either airlines, your hotels, your cruise ships, rent a car. I'd keep an eye on them here for Q4 because again, good COVID news and a good stock market to build up that household wealth. And you could be looking at something that would be very, very attractive here. So again, you get above 24, looking pretty good. Your RSI right now is at 48. So get above 24 and you're probably getting going somewhere. How about on the 5-year? 5-year, again, get above 25. You got a traffic jam there right at 25. So above 25, 26 would be great. And then on the 20-year, again, the red line is be something to work with, and that comes in at 23. The green comes in at 25. So getting above this 22, 25 level, again, be very helpful here. That blue line pointing straight down is kind of ominous though, because, it's hard to get an extended long-term uptrend until you at least flatten out that blue line. Okay, but there you go. You got a situation where the reopening trades we just showed you look pretty good. And go over one area here before we close her up, and that's going to be on the precious metals. Okay, on the precious metals, what are you looking at on the 1 year? On the 1 year, it looks like it's broken down pretty good. RSI is very low, and you need to get this thing back above 32, 33 to get back on the bike. If you're looking at the 5-year, again, look very bad on the technicals here. Getting back above 32, 34 again, it would at least get you going a little bit. So keep an eye on that. And then on the 20-year, I think it's coming right into support. So if you are a believer, these are the former highs and there's your support. So if you're a believer, this is a neighborhood where you might take a nibble because you certainly don't want it way underneath that blue line, which comes in right at 30 bucks. So again, if you are a believer that these metals are only temporarily coming down and that printing of money and inflation and disruptive situations are going to cause people to want this tangible asset, store of value, then again, keep an eye on it down here because this would be a zone where it would stop. Let's take a look at the silver. We're going to look at SILV. Hold on a second here. SILJ, I'm sorry. These are the junior miners. And if you look back here at the 1 year graph, you can see they've broken down. Getting back above 1350 would be something to see. And then it opens up the window. There you go on the 5-year. Again, a lot of resistance, a big traffic jam at 15. And on the 20-year, just like on the gold, it's holding the area down here, which is $11.66. So if it can hold this 11.66, start getting back above what? 13, getting back above 15, then you could build a case that we're back on the bicycle and this thing could go. So there's some good numbers of which to use as thresholds. Yeah, what I try to do today is to have you look at things on a 1 year basis, on a 5-year basis, and a 20-year basis, and using some SMAs, 12, 24, and 36, plus an RSI, to give you a little bit of an idea of where there could be some support, where there is some resistance, where if we got moving, things could change from where they are during this broadcast. Again, each and every week, we do have a newsletter that we do send out with our opinions and our observations. Again, they are for informational purposes only. So you should always talk to your brokerage firm, broker and advisor, to find out what is suitable and right for you, if anything of this. And basically take the information and put it into your research and see what you think. But again, when you go to optionprofessor.com and put your email in, boom, you'll get the information right away. We have PDF files explaining different ways to use options, things that we think are good ways of doing it. Which is the risk? What is the purpose of the strategies, to try to help people that maybe are not as knowledgeable as experienced people. And again, knowledge gives you the science of it, and then art is how you use your science. And obviously, it's a two-pronged thing. There was one other metal that people have been talking about in a stock, and these are industrial metals, and they've had a hard time of it lately. So let's see if there's any reason to keep an eye on them. Okay, this is a one-year graph I'm going to show you on Freeport-McMoRan. Very popular with the rebuild people, and looks like it's giving it up here. On a 5-year basis, anything to hold on to? Now, again, you see you had a traffic jam at 36, and that was our position. When it was trading around 36, we said, if we can't get to 38, it isn't going to go to 40 or 44. So let's wait and see if it'll give us some strength. Not only didn't it give us strength, it gave us a heck of a drop. So sometimes, like I say, waiting for strength and then jumping on a train that's already moving sometimes is a better way to go. But this thing is definitely on the defensive until we get back above 36 in our view. Now, underneath for longer term, again, a lot of these markets have got big corrective possibilities if they really rolled over. But if they don't, here, the near term one is at 31.32. So holding on to 32 would be very nice. And again, it closed under there. So if it starts getting above 32, it starts getting above 36, then you can build the case that this pullback is over. If not, and the news goes real sour, then there you go. It could go all the way down here. So again, the news is going to be unfolding in Q4, and China is going to give you a lot of news. We got the Beijing Olympics coming up in February. So our belief has been that Beijing is going to want to make their situation look as good as possible before people show up, kind of like cleaning house before visitors. So our feeling is that it's possible that the drop in some of the stocks over in China may be done. So let's take a look at that and see if we got any evidence of that. You see this drop here to 33? That might be it. And this thing down here, if it doesn't take out this, okay, this could be an opportunity down here if in Q4 we're going to turn around. Same thing with K-Web. So, there's your line in the sand right there. And let me just go fast because I only got a minute to go. I'm going to give you K-Web. So there you go. K-Web is at 40. How about BABA? I think BABA was like 150. Let's see. Yeah, it's at 150 now. So the lows here, well, actually, they're making lows right now. How about Baidu? That's why a diversified index of companies might be a better way to go. Yeah, see Baidu at 140 right there. That would be the thing to defend against. So FXI at that number I mentioned, and there seems to be it. Okay, we're at the hour point, so I'm going to wrap up. Again, this is Option Professor of optionprofessor.com. I shared quite a bit of information. If you'd like to keep in touch with our thoughts and our observations each week, optionprofessor.com, put in your email, and we'll talk to you next time. Good to have us with you. I hope I shared a lot of information you can use, and good luck and good trading, everybody. And we'll be back with you afterwards. Okay, but again, optionprofessor.com, throw your email in, and we'll be in touch every week. Thanks again.